What up, wealth investopians, money maestros, and future billionaires? You ever feel like someone's playing a giant game of Monopoly with your life, but you're just a tiny thimble trying not to get bulldozed? Well, buckle up, because today we're pulling back the curtain on some seriously wild stuff happening in the financial world that could hit your wallet where it hurts, or, if you're smart, help you stack some serious cash. Remember back in 2020 when everyone was whispering about BlackRock buying up all the single-family homes? It was a huge deal, sparking so much chatter that BlackRock themselves had to put out a statement basically saying, "Whoa, hold your horses, people. We're not buying individual houses." But then, if you scroll down a bit, they also mentioned they are buying up multifamily houses, apartment complexes, and other residential real estate that we rent out. So, conspiracy or not, I'm just here to tell you what they said. You can connect those dots yourself, you savvy sleuths. But here's the kicker. We're seeing a déjà vu moment right now, but it's not about houses this time. Nope. It's about something even more fundamental: your electricity, your energy, your utility bills. People are getting a little charged up because they're worried BlackRock scooping up electricity companies could send your energy prices soaring. And let's be real, who needs another bill hike when avocado toast is already breaking the bank? So let's dim the lights on confusion and shed some light on what's really going on. What is BlackRock anyway? All right, first things first. Who is BlackRock? Imagine the world's biggest piggy bank, but instead of holding your allowance, it holds trillions of dollars from investors worldwide. We're talking pensions, endowments, individual wealth, a literal ocean of money. Now, BlackRock takes all that cash and invests it in various assets with one goal: make a profit. They give some back to the investors and then, naturally, take a percentage for being the financial masterminds behind it all. Pretty sweet deal, right? Now, this whole asset manager thing isn't new. What is new, and frankly, a little spicy, is these asset managers, especially giants like BlackRock, with their practically limitless capital, are starting to buy up what they call real assets. What used to happen? They just buy shares of companies on the stock market, a piece of Apple, a slice of Google. But now, they're branching out like a financial octopus, influencing way more parts of the economy than ever before. Case in point, remember those houses? The Wall Street Journal straight up said institutional investors scooped up hundreds of thousands of houses to rent out and are contributing to the dearth of homes for sale and driving up home prices. Yeah, that's not exactly a small influence, but now the definition of real assets is getting even broader. We're talking energy companies, utility companies. Last year, BlackRock acquired Global Infrastructure Partners, which owns companies across energy, transportation, water, and waste management. Basically, all the stuff you need to survive. And get this, they're reportedly in talks to buy Minnesota Power, which provides electricity to 150,000 people. This isn't just about BlackRock, folks. It's a bigger trend. Asset managers are realizing, hey, why just play in the stock market when we can own the stuff people literally cannot live without? Real estate, utilities, electricity, water, waste management, these are income streams that are about as steady as your grandpa's morning coffee routine. Let me break down why this matters to you, the consumer, the everyday person just trying to keep the lights on. Let's look at how corporations and investors work hand in hand. You've got your workers, analysts, associates, VPs, directors, and at the top, the CEO. Most people think the CEO is the ultimate boss, the king of the corporate castle, right? Wrong. The CEO has a legal obligation, a fiduciary duty to make one group of people rich. Is it the customers? No. Is it the employees? Nope, it's the shareholders. These shareholders own the company. They could be regular folks like you and me buying a few shares, employees with stock options, or, bam, big institutions like BlackRock who buy massive chunks of the company. So the CEO's main job? Increase that share value to make the shareholders wealthier. This is why it's so important to be an investor, but we'll get to that. It gets even juicier. Who tells the CEO what to do? The board of directors. Think of them as the CEO's super bosses, the bridge between the shareholders and the executive suite. And who elects the board of directors? You guessed it, the shareholders. If you own a share, you get a vote. Now, if you've invested $100, 1,000, even 100,000, your vote is like a whisper in a hurricane. But if you're BlackRock rolling in with hundreds of millions or billions of dollars worth of shares, oh honey, your vote isn't just a whisper, it's a full-blown megaphone. So, if a huge asset manager owns a big chunk of a company, they have a massive say in who gets on that board. And if the CEO isn't doing what the board wants, which, let's remember, is what the big shareholders want, and guess what? You're fired. New CEO, same mission, make those shareholders happy. See how it all connects? The ultimate goal is to increase shareholder value. And this, my friends, is exactly why you need to be an investor yourself. It's not just about getting a piece of the pie. It's about being at the table. So at the time I'm recording this, BlackRock has about $7 trillion invested in the stock market. 7 trillion. That makes them essentially the largest owner of companies in the stock market. But remember, that's not their money. It's our money, investors' money, that they're managing. Now, you can love BlackRock, you can hate BlackRock, you can debate whether they're buying too much or not enough. But at the end of the day, there are some seriously valuable lessons we, as individual investors, can learn from them. What do I mean? BlackRock says they want to own what's stable and what will produce income forever. Think about it. Our economy is currently a roller coaster. New government policies, tariffs, AI bursting onto the scene, it's all creating massive volatility. If you're managing trillions, you hate volatility. You want steady income, steady growth. And that's exactly why they're shifting towards these forever assets. But they're taking it one step further, like a financial chess master playing 10 moves ahead. They're asking, what's going to be in even more demand in 10 or 20 years? Right now, money is pouring into technology and AI faster than a cat chasing a laser pointer. Well, what powers AI? Data centers. What powers data centers? Electricity. As AI expands the need for energy to power those data centers, the AI technology itself and all the computers running it is going to skyrocket. Cha-ching! This is a huge reason why asset managers are jumping into the energy industry. They understand two fundamental truths. 1, people will always need energy. 2, AI is going to make that need explode, leading to bigger profits for those who own the energy companies. If you've been watching my channel, you know our economy is shifting faster than a chameleon on a plaid shirt. It's easy to get overwhelmed, scared, or even panic. But Wall Street, those shrewd operators, always ask one crucial question when there's a shift, whether it's technology, tariffs, or AI. Where is the money moving? Because if you can identify that, you've found an investment opportunity. Your job as an investor isn't just to own a piece of the economy, it's to own a piece of where the economy is going. That's how you see bigger growth, faster wealth accumulation. At the end of the day, building wealth comes down to 3 factors: time, return, and money, TRM. Time. We can't go back in time and start investing 10 years ago, unfortunately. Though if I could, I'd tell my younger self to buy a lot of Bitcoin and not cut my bangs. But more time for compounding means more wealth. Money, M. Obviously, the more money you invest, the more wealth you can build. Starting with $1 million will give you a leg up over starting with $10. We can increase our M by earning more or spending less. But that's a whole other video. Return, R. This is where you have the most control. It's about how fast you can double your money. If it takes 50 years to double, you might only do it once or twice in your lifetime. But if you can double it every 7 years, now we're talking serious velocity. So how do you get better returns without taking on massive risk? This is where the investing onion comes in. When we talk about AI, most people immediately think NVIDIA, AMD, Meta, Amazon, the big tech giants. That's the skin of the onion, the obvious layer. But there are so many layers beneath the surface powering this shift. What's below that? More AI means more data. Where does data live? In the cloud. And the cloud isn't just a fluffy white thing in the sky, it's physical data centers. These are massive buildings full of servers. So investing in companies that build or operate data centers? That's layer 2. More data, more AI, more data centers. Guess what that creates? Massive cybersecurity risks. People are pouring their life stories into ChatGPT, and hackers are licking their chops. So cybersecurity companies are another critical layer. Investment opportunity. Back to those data centers. They need energy. Tons of it, just like we talked about with BlackRock. So companies that provide that energy are another layer. And here's the kicker, the really deep cut. All those super powerful computer chips in data centers, they get hot, like melt your face off hot. If they overheat, everything malfunctions. So companies specializing in cooling data centers, completely different businesses, innovating ways to keep these digital brains from frying, that's another often overlooked investment opportunity. See, investing is like an onion. There are so many layers to uncover when you look at a major shift. Every wealthy person, every Wall Street veteran wants to know, where is the money moving? You might not be able to change what the big asset managers do, but what you can do is learn from them. Learn how they think, how they strategize, how they identify these shifts. That way, you can make smarter investing decisions for yourself, for your family, and for your community. Because shifts are happening all around us, and having the best information is your superpower to build that financial freedom you deserve. And if you got value from this video, the best thank you is a referral. So please share this video with a friend, a family member, a colleague, or a fellow investor. Let's all get financially smarter together. Thanks for watching, and I'll catch you in the next one.